And so from an early age, I remember going with my dad. It was School of Hard Knocks, and he'd take me to the rental properties for the day and put me to work painting and doing all sorts of stuff with him. So I from an early age, I was exposed to investing in real estate and working on the properties with him there. I think
we didn't really have specific conversations. I mean, I think we both had similar backgrounds and similar interests, and we got together. It was more natural than that. It was just the natural progression of how things kind of moved along for us. Like Chloe mentioned, we do have a very nice balance between risk on and risk aversion. So it's kind of it works out really well for us.
Now it's just kind of second nature to just manage our funds really good without needing to keep track of exactly where things are going.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome to the Millionaires Unveiled podcast. This is episode number 265. Big news this week. The IRS announced the changes for 401k, 457, 403b increases. In fact, this is probably one of the largest increases ever, especially on a percentage basis, going from $20,500 up to $22,500 for 401ks, 403bs, and most 457 plans. So just under a 10%, 9.8% increase on those. Obviously, it's to keep up with inflation to some degree, but also IRS looks at these annually. There's also a jump in the IRA contribution limits going to $6,500 up from $6,000, so about an 8.3% increase. Catch-up contribution limits are going to stay at $1,000. However, there are some other things in the works possibly related to catch-up. There's a bill out there, or maybe even a couple bills. I haven't looked at it in quite a while, but they're looking at potentially increasing those catch-up limits for those potentially to be upwards of like $10,000 for people 50 and up. So we'll have to keep an eye on that. Definitely becoming one of those things in this country where it's getting a little bit more difficult, it seems, for a lot out there to save for retirement or at least catch up to saving for retirement. I think the gig economy and some other things have played some factors in that, as well as a lot of companies used to have pension plans, and those are a bit of a thing of the past for most companies nowadays. So it will be interesting to see if any of that changes here in the next little bit. Something to keep an eye on. But big news this week, for the IRS making those announcements. Affects most of us, or should, I guess, or could, depending on what your personal finance strategy is. But at any rate, big news here going into the end of October. So this week we've got Ty and Chloe. They have a net worth of around $2.5 million, the majority in crypto and real estate. We haven't had somebody on with this much in crypto, and it's interesting to talk to him a little bit. He's been in it for quite some time here and wrote it up, and obviously been all over the place over the last, year here now. So interesting conversation. Still has pretty significant amount of money or wealth tied up in crypto, but it's fallen some since where it was, previously. We get into discussion with him and Chloe really about their risk tolerance and how this all came about, especially in the crypto markets, and where he thinks crypto is headed just as in general as an asset class. So great conversation today with Ty and Chloe. They're in their early 30s. Last week we had Tyson, he was 51, had a net worth of $3 million, worked in oil and gas. Paid for a house around $150,000, and then just under $500,000 in company stock, and then the rest was in the market in various retirement accounts and other investments. So, without any further delay, let's get into the interview with Ty and Chloe.
Ty and Chloe, do you want to just give us a little about your background and what you're up to now?
Sure. Hi there, guys. Chloe and Ty and I we're engaged right now to be married.
We both, we're invested in real estate. We're invested in cryptocurrency. We both started at a pretty young age where, I bought my first house, and I was probably 20 years old, I think. And how old were you when you bought your first house?
I was 26 when I bought my first house.
Yeah, so we both started pretty young with real estate, and ever since then, ever since we met, we've kind of been interested in growing our net worth and dabbling in some different types of investments. So yeah,
cool.
And
you shared you're engaged to be married. So when's the wedding date?
To be determined.
TBD. Okay, cool.
My big thing is I don't want to spend a lot of money on a big fancy wedding.
Yeah.
So
And Ty does?
No, we're both
no. Cool. How long have y'all been engaged?
Since December, so 10 months now.
Okay, cool. So let's rewind you. You mentioned you started at a young age, and Ty, for you, would you mind just kind of giving us a little bit of background on what has taken place in your life, high school to now, as it relates to schooling and career?
Yeah, absolutely. So I kind of took more of a non-traditional path in that I went to a vocational high school. I kind of knew from a young age that I wasn't really interested in going to college. I knew that I wanted to get out of school and just, immediately start making money. I mean, when I was that young, I was more how should I put this? I was more concerned about making, getting into a career as opposed to, spending years in college, for example, and racking up student debt, that type of thing. But so I went to a vocational high school for HVAC, and I got out, and like I said, I was less interested in college at that point, more interested in just making some money. So I found I got into building automation, where why don't I back that up a little bit?
No, that's fine. So let me ask this. So you go to this vocational high school for HVAC. Did you have the skills to go into that right away at 18?
Yeah, absolutely. I found an entry level position in building automation, and
okay.
I started with the large building automation company. I believe I was a few months short of 19 years old, and it was an entry level position, and I essentially got in at the bottom of a very tall ladder. So when I started, my original idea is that I would continue with that company and just, do my best to climb the corporate ladder. And, at some point in that, I kind of realized that I was getting burnt out doing so. So I was looking for alternative means of making money. So that led me into some other avenues.
How much were you making when you first started right out of high school?
I started at $14.26 an hour.
Okay, so right out of high school, had some skills, started making $14. How long did you stay in that building automation for?
It was about 13 years.
Oh, wow. So you stayed in it for quite a while.
Yeah. I started as a technician. I did that for a few years, got sick of that. I'm like, I want to do the next bigger and better things. So I kind of took on more of a project management role. Did that for a while. There was a great deal of stress in that. So at that point, I felt like I was more interested in engineering. So I transitioned into that, and then from there, sales. So I think when I left building automation, I was making somewhere in the ballpark of $130,000 a year.
Wow. So, that's just crazy, right? Like in this country, we have such a push on higher education, but here you are, went to a vocational high school, graduated with some skills to be in the building automation, HVAC, go into that world, spend several years in there, and a decade later, you're making $130,000, which, a lot of MBAs aren't even making that when they graduate with an MBA after they've got an undergrad degree, and you had no student loan debt, correct?
That's right.
Interesting. So, Chloe, let's switch over to you. What did things look like for you as you graduated high school, and what were those first few years after high school look like for you?
Sure. So back when I was in high school, I remember going to look at a couple of colleges with my parents, and from a very early age, it was clear to me that my parents they made it clear, college is on you. You have to pay that bill. And, I was looking at these $40,000 a year schools, and I was like, wow, I cannot afford this. So after high school, I decided to go to a local community college, and I was able to pay that as I went. While I was doing that, I started working part-time in banking and then moved into full-time. And from there, that they actually started to help me pay for certain business classes. I was getting an associate's in business and technology. And so from there, I moved on to a 4-year school, and they helped pay part of the class. As long as it was a business related class, they would help pay for part of it, up to, I believe it was $4,000 a semester. So from there, I almost got my college degree, my 4-year degree, but things got a little crazy at the end, and I just didn't finish. I had a great GPA, just never finished, and had left banking and gone into insurance at that point, and was able to keep climbing up in the insurance world, and didn't really feel like it was necessary to finish that degree. I wasn't enjoying some of my last classes, so I just kind of stopped.
And what do you do for work now?
So I left corporate America, and I became a real estate agent right as the pandemic hit, which was really interesting.
Oh, shoot.
So yeah, but it's been a crazy market since I've joined the real estate world.
Okay. And Ty, what do you do for work now?
Primarily, I just invest in cryptocurrency, and we have some rental properties, so I maintain those. We kind of as an experiment, we took on a single family flip. So we're in the process of selling that now. So yeah, crypto and real estate.
Okay, awesome. We'll get into that, but let's just back up here from the beginning. Let's talk net worth, just so people know where you're at. You guys are young 30s, and what's your current net worth?
It's about 2.5 million.
2.5, and how is it invested?
So the majority of it is in crypto, but so it's about 1.45 million in crypto. Maybe 761,000 of that is in real estate equity. Yeah, so 761,000 in real estate equity, about 20,000 cash. Try not to keep a lot of cash on hand.
So we have in our 401ks combined, it's about 274,000. That does include a Roth IRA that I have that. It's small. I was just putting a little bit in there. That's probably about 15,000. And then we have an HSA that it has about $11,400 in it.
Okay, so you're kind of small. I say small, but let's just call it 15,000. Your HSA, 15,000 in Roth, 15,000 in cash. Primarily, you got 1.4ish in crypto, 750 in real estate. Does that include real estate your primary residence, or is that separate?
Yes,
that does. And our primary residence is the 3 family. So it's also a
investment for us.
Gotcha. Yeah, so you're living in one and renting out the other 2.
Yeah, exactly. And right now it's kind of a wash, but eventually we'll move out, and this place it'll cash flow for us.
Awesome. All right. Well, I mean, the big piece here, obviously, we mentioned before the show, 1.4 million in crypto. So about, I guess, more than 60% or so of your net worth, 65% maybe. Jace, I think that's the biggest we've had in crypto. But how did that come to be? When did the crypto story start?
Well, a friend of mine told me about crypto in 2017, and at first I was like, "Oh, what the heck is this?" I thought it might have been a scam, or I had almost no idea what it was. But I downloaded an app called Coinbase, and I invested $40. I bought 1 Ethereum at the time. Yeah, it went up to about maybe $45, and I sold it. I'm like, wow, this is great. I invested $40. It turned into $45. I made $5. This is a real thing. And, the money actually, I was able to withdraw that into my checking account, and I saw it there. I'm like, okay, so this is real. I can put money in and then, gain and then withdraw it. And, from there, I started investing more money. I think I probably invested maybe a total of $5,000 to $10,000 in early 2017. A lot of that kind of funneled its way into scams and other things. But my primary investment was in Ethereum and Bitcoin, and it performed very well. So I mean the appreciation of Ethereum greatly outweighed what I had lost in scams. Yeah, I think by the end of 2017, my crypto portfolio was worth maybe $40,000. And, all throughout that year, I spent a lot of time just, learning about market cycles and technical analysis and, all sorts of investments. I was just, very intrigued in the entire space. I just wanted to learn as much as possible about crypto that I could. And, I thought that the market was reaching a peak. I think Ethereum was somewhere around $1,000. And I sold the majority of my position then. And actually, traded the crash thereafter, and was able to significantly increase the amount of Ethereum holdings that I had.
So this is all while you were working, right?
Yeah, exactly. I was kind of just doing it on the side, just trying to, I identified it as a way that I could potentially make some money on the side, and it seemed to be working out. But the more I learned, the more I thought that cryptocurrency had a place in our future. So I was actively trading crypto, but my ultimate goal was just to amass as much as possible. So
when did the balances get big?
The balances got big after I spent a couple years accumulating the crash. So from maybe 2018 to 2020, I did a lot of buying, and that's where, I think throughout that time I had a couple different positions in building automation. I believe I was an engineer, and my salary was somewhere around $100,000 a year. Then later I transitioned into sales, and that got a little boost, but it was fantastic because I was able to invest a large amount into cryptocurrency while the prices were low. So pretty much
this is 2018-ish now?
Yeah, like 2018 to like early 2020. And then, crypto really took off right after the COVID crash. So
what's your basis in that?
My basis is very low. At this point, I probably have maybe $20,000 invested.
You invested $20,000 and it's at 1.4?
Yeah.
Wow. And is the play long term? I guess obviously you haven't sold it.
It's kind of a midterm play. I mean, I think crypto is kind of in the middle, or maybe the first third of another bubble. We're kind of seeing that play out right now. So I kind of have a similar plan for this go around, where I've amassed a decent size holding, and I plan on holding that throughout this market cycle, and trying to sell somewhere close to the peak. It's hard to time it perfect, but.
So what's your take on it, Ty? You think it's going to replace the dollar, or where do you kind of stand in that range of what people think crypto could or couldn't be in the future?
Well, I think the dollar suffered for many years. I mean, since losing the gold standard, and I can't recall the year, but somewhere around the 50s, the dollar's consistently lost value year over year. It's kind of designed to do that. If you have an asset with a finite supply, like Bitcoin, for example, ideally, as long as demand continues to increase for it, we should see prices to continue to appreciate. So will it replace the dollar? Probably not, but I think it could hold a place for a lot of people as a store of value, similar to gold.
Yeah. Chloe, what do you think about all this? You're like, he's crazy, or are you right on board with him?
In the beginning, I thought he was totally crazy. I mean, so to backtrack a little bit, he moved into my house because he was able to work remote. And so there was a point in time,
I thought you were going to say because he didn't have any money because he was investing it all in crypto.
Well, so that is he was. We rented out his house, and I was paying the bills, and he was really putting a lot of money into crypto at that point. The other thing he was doing was him and some buddies started building miners, and they were mining cryptocurrencies. So there was a point when miners were heating my house in the winter. If it got cold, we'd turn the miner on in our bedroom before we went to bed that night. So, but I can tell you my electric bill was insane.
Yeah, imagine
how
that.
much?
Most people are paying for heat in the winter, and in our case, the heat was paying us.
I think it was like $400 to $500.
Yeah, definitely. Yeah, her electric bill was in the $400 to $500 territory. We had I had two partners in the mining rig operation. We had a moderate sized farm, and our electric bill there was somewhere in the ballpark of like $1,200 to $1,400 a month.
So let me go back to your work in college history, or lack of college history, Ty. Did your parents support this, or they think you're crazy to not go to college?
Neither of my parents actually went to college, so it wasn't something I ever felt like I had to do. I mean, from a young age, both of my parents are pretty successful, so I kind of, and they're both, they have working class jobs. My mom's in janitorial services, and my dad's an auto body technician. So I mean, I saw the both of them make decent careers out of a trade. So I kind of that's just how I grew up. I grew up with the ideology that I didn't need a degree to be successful in life.
And what about your background in personal finance and investing and saving? Did your parents teach you about that? If you learned it on your own?
Yeah, good point. So my mother and stepfather actually they each had rental property. So when they first met, they each had duplexes, and they actually had a terrible experience with it. And even up until recently, my mom has greatly discouraged me into purchasing rental property just because of the nightmares she went through. But I mean, so far it's been fantastic for us. I mean, I'm sure we'll have a rainy day, but it's yet to happen.
And Chloe, same question to you. What was your background like?
Yeah, so my parents both, well, neither of them went to college, and they were both working class, but they had invested in real estate. And so from an early age, I remember going with my dad. It was school of hard knocks, and he'd take me to the rental properties for the day and put me to work painting and doing all sorts of stuff with him. So I from an early age, I was exposed to investing in real estate and working on the properties with them there.
What do you all do for health insurance?
We pay out of pocket right now. To be determined. We actually have to get something better down.
Uninsured. I actually not a big fan of the insurance industry, so I'm kind of at this point just rebelling against the entire thing and choosing not to have health insurance. But we also take very good care of ourselves. So I mean, I'm 32, she's 33. We're both very healthy, and right now I don't feel the need to have health insurance for myself. I think she'll probably need health insurance pretty soon, though.
Okay, so at 2.5 plus, give or take, young 30s, where do you go from here? What does the future hold in terms of building your net worth and accumulating, some more assets and more crypto? And is there a number out there?
Yeah, I mean, the goal for at least this crypto market cycle is I'd really love my crypto portfolio to exceed 5 million. I think it could greatly exceed that. I mean, I wouldn't be surprised if, based on my current holdings, if my portfolio reached even, 8 to 10 million within the next 6 months to a year. But my goal is a conservative 5. What I'd like to do is, exit a significant portion of my crypto holdings and kind of diversify more into some long-term stuff, maybe 1 or 2 more rental properties. I'd love to pick up another 3 or 4 family rental property. I know Chloe is very interested in maybe purchasing a business of some sort. We've been talking about possibly a laundromat, something to that effect, just to diversify a little more.
Yeah, it's something we talk about all the time, is kind of what the next step is. We haven't quite figured it out, but we're constantly having open dialogue about, where we're going to go, and once we exit crypto, how we're going to allocate those funds to best serve us in the future.
Ty, let me ask, with the crypto, is that something that you kind of dollar cost average as you exit and enter, or is it all at once? I think this is the bottom, or what's your approach there?
Good question. I take more of a dynamic dollar cost averaging approach, where if the market, there's a handful of assets that I'm very interested in. You may know there's somewhere in excess of 10,000 cryptocurrencies, and my portfolio consists of maybe 5 or 6 of those. So what I do with across those 5 or 6 cryptocurrencies is, if one is particularly underperforming in comparison to the rest, I might average, or I might invest more into that tip, and I might invest more into that cryptocurrency in comparison to the others. So it's kind of more of a dynamic approach than a typical dollar cost average, where someone might just say, okay, weekly, I'm going to spread X amount of dollars across whatever cryptos they're interested in.
Which platforms do you typically use to invest in the 5 or 6?
Generally, it's Coinbase, but there's some DeFi protocols that, or I should say decentralized exchanges that allow you to swap on chain. So I've been doing a little bit of that lately. It gets kind of expensive, so if you're not transacting in large amounts, it's kind of the fees will eat you alive, essentially.
Yeah. What are your favorite 2 or 3 holdings that you have?
My crypto portfolio, 46% of that consists of Ethereum, so that's probably my top holding. Next would be 18% of that is Cell token. That's the Celsius network native token. 13% of that is Bitcoin, and the remainder, the remaining 23% is spread across low cap altcoins and stablecoin.
Dude, where's your Doge?
I'm really not interested in Doge, not at this point in the game. I actually bought Doge at rock bottom prices. I was looking at it, and Doge is actually a pretty old cryptocurrency. So if you zoom out and look at the entire history of Doge, you can kind of with relative certainty, you can predict where it's going to trade, and it's pretty reliably traded in a fixed range. So I identified that Doge was at the bottom of that range, and I said, okay, if I'm going to invest in Doge, it's going to be now. And I actually put maybe $3,000 or $5,000 into a Doge investment at rock bottom prices, and I think I maybe tripled my money and exited. I'm not really interested in hanging on to purely speculative investments long term. So I was, plenty happy with a 3 times return.
So what does it look like on the day-to-day for somebody? I mean, I'd call you a professional crypto trader at this point. If you disagree with me, we can call it something else. But what does it look like in terms of your active involvement, and how much time do you spend with crypto on a daily basis?
I actually don't spend a whole lot of time with crypto on a daily basis. I'm more of a long-term, I guess you could call me a swing trader. Like I said, I have a very low cost basis that I've managed to accumulate throughout 2018 to 2020. So really, the market can fluctuate 10 or 20 or even 50%, and I'm not going to lose sleep over it, really.
So Ty, let me push you. Jace asked about the health insurance. If so, you had some crazy accident, you could lose all this without health insurance.
Yeah, I could. It's a risk.
That doesn't worry you for whatever, 10 grand a year or something?
Right now it doesn't. I mean,
I think the other thing to note too is Ty just recently exited the corporate world this year. So he just left his health insurance, and I just kind of recently left mine last year. So it's something that we do, at least I acknowledge we have to address, because I do think it is important to have that health insurance.
No, yeah. I mean, to each their own. I'm just thinking you get in some car accident, right?
He's a big risk taker. So
yeah.
And Chloe, before you met Ty, what was your risk appetite, and has it changed?
Very conservative. And that's the thing with our relationship, why we balance each other out so well, is I'm kind of the more conservative one, and he's the big risk taker. And so, we kind of balance each other out in that aspect. Before I met Ty, I was on the slow path to maybe becoming a millionaire when I was retiring, but we got together, and then things just really accelerated because we kind of helped propel each other forward in the perfect balance.
And how were those conversations early, Ty? You're like, hey, we got to take more risk. And she's like, hey, no, I'm risk averse.
Yeah, it's a good question.
I think
we didn't really have specific conversations. I mean, I think we both had similar backgrounds and similar interests, and we got together. It was more natural than that. It was just the natural progression of how things kind of moved along for us. Like Chloe mentioned, we do have a very nice balance between risk on and risk aversion. So it's kind of it works out really well for us.
Yeah. So Chloe, you've upped your appetite for risk, or at least become a little bit less conservative, because now you're working in real estate, and you're thinking about buying your own business. I mean, is that something you would have considered years ago?
Yeah, I've always had the entrepreneurial mindset. I remember even as a kid, I was hustling and dog sitting and babysitting and running my little businesses on the side. So I've always had that mindset. I never felt like I belonged in corporate America. I really got burnt out from it and just never was happy. So as an agent, I work for myself. I'm much happier that way. But I think with Ty, I could recognize that he just had to do his thing, and I know he's an intelligent person. So I was kind of letting him when crypto first started, he started investing in it. I just kind of let him do his thing. And I joked with him, and I used to say, when your portfolio hits 80,000, you have to take me on a vacation. And I'm still waiting for that vacation.
Oh, Ty, come on, man.
We've gone on some adventures. We just haven't gone on a big one yet.
Yeah, she's also hesitant to have me sell any of my crypto because she wants it to grow.
At this point, I'm like, no, you gotta keep holding it. It needs to keep growing. So
she wants it to go to the moon.
Yes,
that's right, to the moon.
So the real estate, we touched on it briefly, but about 750 in real estate equity. The majority of that is in your primary, the 3-unit one you live in.
No, actually. So in our primary, we have about 116 in equity. We have a single family that Ty essentially flipped. We didn't know what we were going to do with it when we first bought it, and we ended up flipping it just because the market went where it went. And then we have another 3-family that we own that 100%. So we have about 325,000 in equity in that.
I should mention that I took the opportunity to diversify out of crypto when a particular asset performed exceptionally well, and I use those funds to buy that 3-family. Right now, we don't have a loan on that.
And
cash flow very nicely here in the near future.
And then we do have one less property that used to be his original primary residence when we first met. And we have about 153,000 in equity in that property.
Okay, so you have mortgages on these real estate properties still,
except for the 3-family that we purchased with crypto funds.
And you mentioned, Ty, that they should cash flow shortly. Are any of them cash flowing now, or do you have them on a 30-year or 15?
Yeah, so 3 of the properties are on a 30-year loan, and the 3-family that doesn't have a loan, I mean, that only one of the 3 units is rented at this time. We are actively trying to rent one of the units, and another I'm performing some renovations on right now. So that should be rented here in the spring. So we should be fully rented by call it March of next year. And that should cash flow somewhere in the ballpark of maybe $3,500 a month.
It's a lot. Yeah, you'd be at $42,000 a year in passive income from that.
Yeah, our primary residence, the 3-family we live in right now, that one's probably neutral.
Yeah, our tenants pay the mortgage on our 3-family, so that we live in. So I mean, it's great. It's essentially a wash, like Ty was saying. So it's great when you can allocate those funds to somewhere else when you're not paying a primary,
right?
Mortgage.
So you guys mentioned you both bought homes around age 26. Chloe, we'll start with you. How were you able to do that so early on?
Yeah, I mean, when I was 19, I was talking about it. I would tell people I was going to buy a house. And so I saved my money, and I actually found a property that was not on the market. It was a complete fixer-upper. It was original owner had passed away, and I was able to purchase it. And I got in there and had no idea what I was doing, and was living there for a while and had done some renovations. And then when I met Ty, he's super handy, and that just kind of exploded, where we ended up completely renovating that and selling it. It walked away with a nice income from that property there.
Yeah, we actually took a lot of the proceeds from selling your first house and invested that in the 3-family we live in now. So
right.
Yeah, that worked out pretty nice.
Yeah, and Ty, you bought yours when you were 20?
Yeah, it was probably 20. I want to say that was in maybe 2010. I knew that the housing market had kind of took a big hit, and when was it, 2008, 2009 timeframe, and the market was still pretty favorable for buyers in 2010. So at that time I was probably making $50,000 or $60,000 a year. So I was able to save up a little bit of cash, and enough to at the very least look for a starter home or a fixer upper type home. So
yeah. So what's your guys' annual household income now, if you take out the investment growth?
Well, It's a tough question for us to answer. Because I can give you the number when we both were still in corporate America, which when we both were in corporate America, the highest I was making was 75,000 annually, and then Ty, you were at
about 130.
130, yeah. And then this year I'm on track to make a little less actually in real estate. It's going to be my first full year, so I'm expected to make about 65,000 this year. And Ty, he renovated the property that we're selling, so we're going to get.
Yeah, on the flip, we should walk away with about $50,000.
Right. So it's really hard to give you a set number.
No, that's good. That kind of gives us an idea. And what about spending? How much do you spend annually?
Well, before I answer that question, I also make somewhere in the ballpark of $50,000 a year in interest income, and that's interest earned on crypto holdings.
Okay.
Yeah.
And to answer annual household spending, that's also a really tough question for us to answer, because we essentially take all of our money, and what we've been doing is just reinvesting it, whether it's crypto, real estate. I think I mentioned Ty's really handy. So, we redid a kitchen in the unit that we're living in. We redid the bathroom. Basically, all our money is spent at Home Depot and Lowe's. So it's not, so it's really hard to pinpoint exactly what our spending is, because a lot of it is just being reinvested into real estate right now.
Right. You got mortgage, food, travel, that kind of stuff, right? But Ty didn't take you on a trip, so not much travel.
Yeah. I mean, and we don't really keep track of it. We just, I think I'm the one that mostly pays all the bills, and just from a young age, I've always been really good with money. I think I remember being in my early 20s, and I would take envelopes and separate my money for food, groceries and rent or whatever I had to pay school. And so now it's just kind of second nature to just manage our funds really good without needing to keep track of exactly where things are going.
Yeah. So, all right, let's wrap up here with a couple questions, and then we'll do rapid fire. But just as we wind down here, as you guys look back, I mean, obviously young 30, so you're just beginning your journey, but you're already at $2.5 million net worth. I think I know Ty's answer to this, but what would you say if you could pinpoint a few things that helped you become a millionaire? What would they be? Ty, I assume you would say risk, taking good risks.
Yeah, calculated risk, definitely.
Okay, yeah. Chloe, what about you?
I don't think I would be where I am without Ty. So, those calculated risks are definitely a smart move. I think if I had just been doing this on my own, I would have continued to invest in real estate and slowly gotten to millionaire status.
Yeah, Ty, elaborate on your risk, because in the form that you wrote into us before, you said, be prepared to lose everything again in your pursuit of wealth creation. The worst thing that can happen is total loss, whereas the upside potential is astronomical.
Yeah, absolutely. That's a great point. When your net worth is exceptionally low, I mean, there's when there's not a lot to lose and there's so much to gain. To me, it doesn't make sense to not attempt, to not risk everything in pursuit of growing your wealth. So I kind of, at some point in time, probably in my mid-20s, my mindset changed where I was just okay with potentially losing everything, at least until I was maybe 40 or 45 years old, in an attempt to succeed at growing measurable wealth. So that's kind of that's my investment philosophy at this point in life.
And I think it's important to note we don't have any children, so I think if children are involved, that would be a different risk tolerance for sure.
Sure. And you both have good backgrounds where you can just go out and get a job, right? If you really needed to.
Absolutely. And that was a big scary thing for me when I was leaving corporate America. I was scared of making the jump, and Ty kept pushing me to just do it. And now I'm in the mindset of, you're right. If we financially got into a hard spot right now, both of us have backgrounds in corporate America where we could easily jump right back in and get a decent paying job right away.
Yeah. All righty. Well, let's wrap up here with some rapid fire question, then we'll get into some final words of advice. So what's the most expensive vacation you guys have ever taken?
We don't really take expensive vacations.
Yeah.
As a matter of fact, one thing we enjoy doing is we everyone's aware of those timeshare deals where they sell you on like a 4-day getaway or something like that. Yeah. So we absolutely enjoy exploiting those deals. And we'll go away to Las Vegas or Orlando or something like that, and it's essentially at no cost. We pay for the flights and the food, and the basic.
Listen to the sales pitch.
Yeah, we listen to the sales pitch, and the hotel carries the tab.
Yeah, I mean, we've always traveled smart. We haven't traveled internationally together, so it's something I'm looking forward to doing. But we both used to travel for corporate America, and both racked up a decent amount of hotel points in that and car rental points. So we've been able to kind of ride that wave for a while.
Yeah, I think those days are.
Yeah, those days are over now.
End, yeah.
Okay, what about the most expensive car you've ever purchased?
All right, so the most expensive car I've ever purchased was it was a 2014 Toyota Prius C, and that was probably around $20,000.
And then we purchased a RAV4 Prime, a 2021 RAV4 Prime, and that cost...
That was probably around $50,000, maybe $52,000.
$52,000.
But that was actually a mechanism to reduce our tax burden in 2020. There's a nice tax credit on that. I believe it was $7,500, and we're actually using that to depreciate against Chloe's business. Yeah,
all right. How old were you guys when you became millionaires?
31. Yeah, I was 31, and she's 32.
Yeah.
Okay. And do your friends, family know that you're worth $2.5 million?
I don't think so. I don't really think anyone knows.
So Ty talks a lot about cryptocurrency. So I think some people know that we've done well, but nobody knows exactly how well.
Yeah, it's not something to brag about.
All right. Well, maybe they'll hear this. Sorry. All right. Any books or websites or tools, anything that's kind of been influential to your success that you would recommend?
Yeah, Robert Kiyosaki's Rich Dad Poor Dad, that was kind of eye-opening for me, at least in defining the difference between assets and liabilities. So I recommend that to people all the time. Anything for you?
Yeah, I mean, I'm a really big fan of your podcast. I listen to it religiously every week. I always encourage people to listen to you guys. I don't know if anybody does.
Well, thank you.
I listen to Bigger Pockets Real Estate podcast too, and the money, some of the Bigger Pockets podcasts. I think those are really helpful to learn about, some investment strategies for us.
Yeah. So as the net worth grows, does being fulfilled and happiness grow with it? Or have you kind of hit a point where money doesn't mean as much anymore?
I think we're kind of new into this whole millionaire status, so it hasn't really
Hasn't set in yet?
Yeah, it hasn't set in, and we haven't really. I mean, there's been I would say, a very minimal lifestyle creep where we, bought some new furniture and bought a new car, but other than that, we haven't really changed how we live. So
for me, the major change is I'm definitely happier now that I'm not in the corporate 9-to-5 grind. I like the idea of kind of being in control of my own financial destiny, so to speak. And I mean, when I wake up every day, I'm in control of what I do. And what I've been doing lately is renovating our one of our 3 families, and to me it just doesn't feel like work. I'll work the entire day. I might start at 8 a.m. or 9 a.m. and I might finish at 9 p.m. and it doesn't feel like work. So that's having that freedom and flexibility is fantastic. So to answer your question, that's where this journey where I've derived happiness from this journey.
Cool, good answer. Thanks for sharing. Okay, what about a number? Do you guys have a number, a net worth goal, a passive income goal?
Yeah, I mean, it's like a moving target, really. I mean, if you would have asked me that 2 years ago, I would have said $1 million, and we've exceeded that. Right now, I have my sight set on 5 million. 10 million would be fantastic, but when we get there, which I'm sure we will, I'm sure that the target will be much further out. So
yeah. All righty. Last question here, Chloe. Let's start with you. If someone came to you and said, "Hey, you're worth $2.5 million. You're in your young 30s. How did you do it? What mistakes did you make, or what's the best advice you can give? What would you say?
Yeah, I mean, I would definitely say don't rack up a bunch of student debt. I think that's something that Ty and I both are thankful we didn't do. Just start your career early if you can, and just keep continuing to climb the ladder and save it and invest while you do that. I never spent a lot of money on anything crazy as in my young 20s, and so that's how I was able to purchase my first house and stuff. I do wish that I bought some crypto when Ty first got into it. I would definitely encourage people to take a look at it now if you can and learn and buy some crypto.
Okay, Ty, what about you? Final words here.
Yeah, I'm with Chloe in that I'm not of the mindset that anyone should, start their career with a big pile of debt. I definitely think it's important to start earning money early on in a career and investing that money very heavily to take advantage of compounding returns. I mean, the power of compounding, is more advantageous when you have greater number of years on your side. So if you can start that early, and that's actually one of my regrets is that I didn't invest heavily from a very young age. I think I started somewhere in my early to mid 20s, which is still young, but in retrospect, I would have liked to invest a lot more as soon as I started working.
Yeah. Awesome. Well, Ty, Chloe, thanks again for coming on. Thanks for sharing your story. Our biggest crypto investors today. So fun to hear a different and new perspective. So again, everybody, that's Ty and Chloe, net worth of $2.5 million, about 1.4-ish, right, is in crypto. So thank you again to both of you.
Thanks, guys. Have a great day.
Yeah, thanks
y'all.
Us.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mattinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.